All right, hi everyone. Welcome to the TimingResearch.com crowd forecast news for November 3rd, 2025. We are recording this at 4 p.m. Eastern Time, and this is episode number 501. If you haven't heard about it yet, we're having our big sixth annual Friendsgiving event, and so the official title is actually 2026 Profit Playbook, and I have arranged for 30 excellent educators who will be here live on Timing Research over the next 3 days and providing their top education for you. So it'll be this week, Tuesday, Wednesday, and Thursday, 10 a.m. until 8 p.m. So just come to TimingResearch.com each day, and there will be a link at the top of the page to join the room. So, um, and all right, so for today's panel, I arranged for Norman Hallett, Erik Gebhard, and Sunny Harris to join us. And Jim, the option professor, is here to moderate, so I'm going to turn it over to him.
Okay, thanks, David, and thanks everybody for being here. We got a lot of stuff going on lately, so we should have a lot to talk about. And of course, we've got a lot of earnings coming out this week, all month long. So, never-ending supply of information like that. Let's take a look at the S&P right now, at around 6850 on the SPX. Can you put that up on the board there, SPX? And let's start with Sunny. Sunny, where do you think we got going here? And if you want to throw on your Sunny bands, that would be helpful because
Well,
we're
it's
pretty
on there and I'm trying to figure out how to get it to share. Let's see. Chat,
okay. Yeah.
share.
I I knew a woman, Sharon Share-alike. She very
Chat video. I'm not showing. It shows that I've shared, but then let's see.
well, I think I see your screen up there.
Oh,
So
good. Okay, so then it says no
trade
symbol.
station.
At ES. Let's just get it going here.
Yeah.
There you go.
And if anyone has any questions that are listening now, you can throw them into the chat box and we can get to them, whether it be a stock or something you want us to take a look at.
Okay, cool. This is the ES itself, the futures contracts. It's on a daily chart.
Uh-huh.
And I have a Substack that's free. Anybody who wants to can sign up for it, and you get it every day. And it's my thoughts on what the market's going to do tomorrow. So it's called Where's the Dow going from here? Technical analysis for tomorrow. And yesterday, that would be Friday, I said I thought we would go down. And the Dow is $INDU, and it went down. And Michael Filigera always counts waves. I've got this as a 1, 2, 3, 4, 5, and now we're in an A. But what do I know? That's Elliott wave counting.
Mm-hmm.
So
And even the S&P, even the S&P backed off their high point quite a bit. So even though they might not be down on the day, they certainly faded off of their early strength. That's for sure.
They sure did. I think we're coming on the Dow. We're coming down to this 47,065 level.
You want to throw the S&P up there? More people kind of trade that more than likely.
I do. That's what I wanted to do.
I also want to hear about the squeeze of those. That's what I watch when I look at you. The squeeze of the two.
The bands. Yeah, I don't know much about that squeeze yet. I do know that when they start getting closer together, then we're more and more likely to have a volatile move pushing out of there.
That makes sense.
Exactly.
But anyway, so you think it might be dipping here, and a lot of people think we could get a little 5% drop here in the next 2 weeks, maybe down towards 6650 or 6700.
I think we're going to.
What'd your numbers look like? 6805 or something?
6805 is where I think we're going.
Is that where the gold and the purple are getting together? Or?
Yeah, they're getting closer together.
The
gold and purple are the dynamic moving average.
Uh-huh.
And they recalculate their own links with every tick of the market. And it's starting to move up. So that would say that we should probably be going up. But I don't think so. I think we're going to have a little bit more of a move down.
Maybe 100 points, 150 points, maybe?
Well, let's see if we went to 68.12 and we're at 68.86, we've only got 70, 60, 70 points.
Yeah. And you don't think we're going on the other side of the lines there, huh?
I
Yeah, we're not
don't.
going to, those lower bands are going to be left lonely down there.
Yep. The pessimist in me says it's gonna crash, but the realistic person in me says just wait, it's not ready yet.
Yeah, it's not, it doesn't have the setup yet. What do you call it? The manufacturing index came in and is still negative, according to Tom Lee. As long as
Hmm.
that's negative, we can't be at the top because tops are generally formed when manufacturing is way above 50 and stuff like that. So
Oh yeah.
whether that has merit or not, only time will tell. But it does make sense that there's still a lot of people who got squeezed out in April who've never really fully invested back in, and the higher it goes without them in, if they're fund managers who have to match the benchmark.
Right.
It does set up a FOMO race to get in there before the end of the year type of situation
Right.
if these guys want to hit their benchmarks, you know what I mean? So
That happens a lot.
yeah. Norm, let's switch over to you and get a little feedback from you on where you're thinking the S&P's at or going to.
I'm still working on lonely teardrops that you just this
The
is
lower the lower bands, the lonely
lonely
teardrop.
teardrops. Well, actually, you can leave that up if you want. Yeah, that's
Oh, sure, I can go back
work
to
of
do
that
that.
chart. It's really my thoughts are a little bit more general. I just want to give people an idea of what I do with the daily chart as a day trader. I think there's something that I call undertow the truth is that I've spent the first 15, 20 years of my career writing trading plans. And the idea is that the any trading plan, any good one, will work the best at the longer time frames and the worst at the 1 minute time frame and so on. In other words,
Mm-hmm.
a shorter time frame you're dealing with when you're dealing, say, with the candle charts, the less accurate any plan will be because you're opening up yourself to shaking out.
Yeah.
Um, the real gaps are right between 2 and 1. Strangely enough, between 2 and 5, not that big, but certainly the daily and the weekly are the most accurate. Most plan builders will tell you that too. So I look at this and when I go to day charting, I say to myself, "Hey, where are the tendencies? Where's the undertow?" And in that daily chart, you can see that the undertow right now is kind of neutral, because when I take a look at this chart, I'm looking at a very consistent place to get in, and that's whenever you see a nice big red line. you know, I mean, the last couple of times, any large candle down has been a really great place to get in, except for the series that you see in the very beginning. But when you see a lot of blue candles like this, you know that the market is still it still has its tendency to go up. I mean, look at this chart. Only a blind
Hmm.
man could see, as they say. But
Mm-hmm.
but I think in this current, uh, I look at it as kind of a neutral. I do think that you're right from a technical standpoint that could see some softness here. But in general, this is a looping type of a softness. And, as a day trader, I use a definite undertow signal to not to give me a direction for all my trades, although I will prefer those, but I prefer in my position sizing. In other words, right now I would have I don't think it's clear which way it's going in the
Hmm.
next couple of days, and therefore my thinking is that I have a neutral bias. I would take the same amount of contracts when I see a short, a 5 minute or 2 minute trade a signal go off. I'll take the same. But when these longer charts give me a clear direction, then I use that in the shorter term charts to affect my position sizing, and I think that's really worked for me over time. So that's really all I want to say here. I mean, look, You got to look for places to move higher if you're a long-term investor, until such time as you don't have a reason to do that. Because anytime you think a trend like this is going to stop, it somehow continues. There's a lot of stuff on the economic calendar we're not seeing. And there's a lot of political action internationally that we're not aware is happening or not happening. So there's a lot of stuff under there that could affect this market. And so keep your stops in, go with the longer term chart for direction, and use that conclusion to use in your position sizing in the shorter term.
Keep your powder dry.
That's it.
Yeah. Erik, how are you seeing things? And let's talk a little bit about the VIX when you're done with your view on this.
Oh, okay. Yeah, I was just enjoying listening to everyone else.
Yeah,
Maybe.
me
Yeah.
too. I always
Yeah.
like it. Yeah.
Um, okay, well, where should I start? I think
Do you want
I
to share
think
your screen, Erik? Or you
I
want?
really don't have anything to show on the
Okay,
screen.
I'll
You
share
can
mine.
you can leave it back to where it was, but just to sort of build on some of the other comments, I think generally speaking, the theme that we're looking at is similar to what I've heard, which is um, this is this is not the time to read the headlines and tell yourself the stock market can't go any higher and I better get short or I better bail out of all my longs. So, we are continuing to be bullish. That's our outlook. And, some of it has to do with options flow. And I don't want to get too wonky on that, but, I can make a few comments on that in a minute. But, you've got a setup here, sort of looking at the global macro landscape, looking at, options flow, looking at systematic trading and CTA positioning and all of these, various elements. You're looking at, you know, politically speaking, there's some elements out there that sound negative and seem negative at first, but they probably aren't. They're probably more supportive um, in the long run here with just more spending, right? And that means more money printing. And, the Fed is continuing, I guess they're probably what the last FOMC didn't we hear about or not the yeah the was it last week? Am I losing track of time? It was last week, wasn't it?
Mm-hmm.
Yeah, so but there was one dissent was in there dissent on the voting member for cutting rates, and
Yeah.
some wanted to leave them the way they were and this and that, but nonetheless things are happening behind the scenes there, and the levers are being turned to stimulate the market. So I don't think you want to bet against the stock market right here as much as there, could be. There always could be this or could be that, but any dips should be bought. I guess
So
that's my
this is like
long-winded.
playing musical chairs, you go around and around and you reach for the chair every step, and everybody's thinking it's going to take a little crash. Well, it's musical chairs.
Yeah, little is, I mean, we're not getting much when we
It's
do get a
relative,
pullback.
yeah.
Yeah. But, you've got the VIX and not signaling anything. And, also looking at option flow, there's something called gamma or dealer gamma. And essentially, we're in a position now where we've got what they call positive gamma. So dealers have to hedge their exposure, what they call their delta exposure, and they basically sell they have to operate in a way which sells futures into strength, and then they buy futures into weakness to keep their book of business hedged. So that
Mm-hmm.
compresses volatility, and that's always a ripe environment for further strength in the stock market. So that's kind of uh, you know a roundabout way of saying not to necessarily bet too strongly or heavily against the market right here.
Yeah. As far as the VIX is concerned, it has gone up towards that 1850, 19 area a couple of times in the last week or so, and it has backed off. And it did that again today, which is obviously bullish. But if we were to get above 19, and if we were to start taking out 6850 or 6800 on the S&P, Do you think that the odds of a more substantial correction would come into play pretty quickly?
Yeah,
Eric.
my
Yeah.
short answer is yes.
Mhm.
But above 19, that's kind of it's a bit of a moving target at times. But yeah, above 19, you start to get into, what some of these researchers, other people we follow, they kind of look at that level, and you get above that level and you start to get more into the choppy scenario rather than a
Mhm.
bullish setup. So yeah, you can really be set up for um, the odds increasing of a pullback at that point. But we've kind of hit that ceiling recently, and so we're still below it. So you just have to go with what the market's telling you.
Yeah, because right now you're on a ledge at around 17. If the thing could get under 16, I think probably 7,000 on the S&P might happen pretty quick. If we start getting at 18, 19, 20, then maybe that dip a little closer to those averages of 6,800 that Sonny was showing, or I actually got it even lower than that, might come into play because a lot of news has hit the market, and I was just listening to people say that if you take out the Mag 7 and that kind of stuff, the uh, rest of the S&P is only up like 6% this year, and corporate bonds are up 7%. So it is a ridiculously centered, uh, performance this year,
Mm.
and so, you know, but
You know, I've
their cap spending is still going through the roof. They're not internally financing it at Oracle anymore. They're coming out with bonds, and I think Meta came out with another offering. So now they're starting to issue debt to finance this stuff, which might be the first tip that we're a little later in the game than people think, because these guys are trying to obviously off the risk to the bondholders as opposed to taking it out of their cash flow.
yeah.
So
You know,
I think
I've been
that's
trading for 45 years in January, and this is the most difficult year I've experienced so far.
hmm. In what
What about
respect?
it's just so choppy.
Hmm.
It's up, it's down, it's up, it's down, it's up, it's down, it's up some more. It's
Well,
so
one thing about
wild.
if you're a VIX follower, one thing you've noticed for sure is that the VIX cannot hold a high number very long, and
Right.
that is obviously very bullish. So,
Yeah.
I
and
got a quick question for Eric. Um, I want to get a little wonky because options were my concentration years ago, but in markets like, and I haven't really looked at an option in months, but when the premiums, both in the puts and the calls, start to collapse a bit, and in these quiet markets, how do you suggest that people, is that just a place to start selling premium for people, or do you or is that a place to start to hunt for the breakout? With looking for some action in the market. How do you tell people to handle the drying up of premium on both sides?
Right, right. Well, I think you kind of have to look at the landscape first, and what is the current trend and what is the current global macro setup. And that's kind of how we look at things, just sort of top down or bottom up, however you want to phrase it. But it also depends on the goals of the person. I mean, they always say, what's the best time to buy insurance is when it's cheap. So if you've got a portfolio and you're looking to hedge your portfolio against a possible correction, and or just to have a hedge on all the time, because that a correction is always possible, right? So yeah, I mean, when you get these VIX numbers starting to fall apart, premium gets cheap and makes your hedges more cheap. But if you're looking to speculate and you want to be a trader, then certainly that is a ripe environment for collecting premium. And so that's kind of what we do. And today we even put out a trade recommendation for our clients, and we're selling puts and calls above and below the ES.
Hmm,
So yeah, that's what we did.
interesting.
what kind of parameters do you like to see right now? Like something with a seven handle on the upside and something with 6,500? Or are you going even wider than that?
Well, here I'll show 'em. I'll show what we did. I conveniently pulled it up in case anyone cared to look.
Yeah.
We care, Eric. We care. Eric the Bold.
There you go. You should be seeing my screen.
Got it.
Yep.
Yeah, so what we call a Dragonfly premium collection strategy. So we're selling 7,500 calls and 6,150 puts. So that's the range we're looking at. And then the blue lines there are basically your long positions as a hedge. So these are all covered strategies in terms of the calls you sell and the puts that you sell. So yeah, that's kind of what it looks like.
It's
And
And
this is a Dees third Friday.
yes, and that's plays off of the March contract, of course, because the December would already be expired.
Oh, I got you.
Yeah.
I got you. Yeah, that's one of the thing with futures. They use different months and stuff. Like in other words, if you're doing soybean December options, it's trading off a January contract, that kind
January,
of thing.
right.
Yeah. That's a little
It's
nuance for people that don't trade the futures, but that's a little different between stock and futures. That's, yeah. And as far as option premiums are concerned, the beautiful thing about the S&P is that you have the diversified risk and that the premiums are very, very large. With the individual stocks, sometimes these stock options get extremely cheap. And with companies like Twilio and Teradyne and Qualcomm and Oracle, these guys can spike up on news very, very fast. So it's pretty exciting to look at the options in the individual stock area as opposed to the index area where you have to move the whole boat to get it to go on a sustained move. And
yeah, it's certainly
we
sexier on
yeah
a big cap stock than
yeah
the
yeah
index, but the index can, certainly move. But something like this, you can see the index here, and here we are right now. But even these strategies, such as the one you're looking at here, even with the market moving higher like this, they still work.
yeah
The theta decay works very well with the VIX at these levels. So,
yeah.
of course, the risk is the VIX goes, doubles in a week, and then you start feeling
yeah
some pressure.
yeah. But that really hadn't been the case. I'm looking at a chart going back to April, and
Right.
mostly you get a move and then you get a stall, then you get a move, then you get a stall. So once you get a move and the premiums do jump, a stall has been what has been following it. Even just recently, the October month had a big run, and then it went into a stall as well until the
Right.
end of the month. Yeah,
Right. So this, we've been pleasantly moving in the right direction here this year with these
yeah.
strategies. So that's been good for us, but it's not always like that.
Yeah, no, but it's nice to have that diversified risk because again, most of the stocks in the S&P are not going crazy like the group that are. And so when that
Right.
group that are slows down and the other group doesn't move, then you really got a stalled engine, which is exactly what you want to see when you're selling premium. So
Yep.
that's a good thing. Sonny, is there any stocks that you're looking at that you'd like to put your Sunny Bands up and maybe share? I know
Oh,
you
I
generally,
just
always traded the big guys,
trade the big
the
guys. I do.
Microsofts and Metas and all those kind of guys. Do you have any, they've picked up a
The
little
one
bit
I
of
like
steam.
right now is Palantir.
Okay,
I mean,
let's check it out.
they're busy helping destroy the east wing of the palace and putting in all this data collection, and they're just screaming on up.
Yeah, I mean, today we had another big day. It looks like an
Yep,
all-time high, right?
yep. So
And
this
in
is
the
one
and
of
the
my
aftermarket,
favorites.
it's got another $6 on it. So,
Oh, does it?
did they have earnings today or something like that?
754 it's got.
Yeah, they had earnings today. So obviously whatever they
Yeah,
earned came out and obviously they're making money
they
because
like it. Yeah,
that's what they do. They make a lot of money.
they
Revenue.
do indeed.
Yeah.
The other one that I like, let's see, Palantir, and
Do
I
you want to
like.
throw your chart up there so everybody can take a look at Palantir and get an idea of like how
Oh,
explosive
okay,
it's
it's
been?
up. Let's see where the share button is.
Yeah.
Share. So we're above. See this yellow dot right here?
Yeah. Yeah.
This is my PHW indicator, potential hourly wage. It tells me how much money is possible to make in any chart. So it's got the ideal highs and lows marked.
Sure.
And if I put a horizontal line right here at this one, that shows us where the next one shows up and how far above we are of it now. So we're doing really well in Palantir.
Yeah, I mean it's well, they've gone beyond governments here in the U.S. They've got all kinds of people looking for them because it's all about efficiency and taking your data and finding out where you can be more efficient, either in your supply chain or whatever you're doing. So it's the usage of the software has expanded so dramatically, and therefore their revenues are expanding dramatically. And they just had good news. Yeah, you caught the 170 here all the way up to the 210 area, so that was a nice
Yeah,
ride, huh? Yeah.
right.
But it's
And
tough to get into something when it's extended above the top line a little bit, isn't it?
not for me, no.
No, you don't
That's
find
when
that.
I like it like that.
Okay.
But this one is collecting all your personal data, so your retinal scan and your facial recognition and your home address and your social security number, all that stuff. Palantir has it.
I got you.
So it's like, oh my God, do I really want these people to track me that way? Versus how much money do I want to make on the stock? So I like the movement of this one.
What about Apple? Do you like Apple, don't you?
I don't.
Oh, you don't? Okay.
I do not
Because
like Apple at all.
what about
And
Amazon? Do you like Amazon? Because Amazon was stalled out quite a bit and then it got going a little bit, but and their AWS business is
well,
really
look at
jumping up.
that. That's real. I mean, it's two red candles, but they're up as can be. Look at that.
Yeah.
Yellow dots over here. That's where it flies out of that range, and that one looks good. Amazon
Why
looks
would the
really
candles be red if the market's breaking up like that?
good. Good question. Because the opening price is higher than the closing price.
Okay, so it opens
So it
strong and fades and
gaps up to
fades.
that
Yeah,
level and falls back down.
I got you.
Yeah.
Because it's a little bit misleading seeing red on something
It
that's gone
is.
from
It is. It looks
two
like,
ten to 260 in a week.
yeah, yeah, exactly. But this is a good one, I think.
Oh yeah,
I don't like Apple because I'm a programmer at heart and I like something I can control.
right.
So I like being able to program my phone as opposed to Apple, which gives me all the programs itself and tells me what I can do.
Now, Norm, are you focusing on the futures mostly with the short-term trading
Yeah,
lately?
you
You want to
can't
share your screen and give a little bit of insight into, how you view setups and how you
absolutely.
kind of manage the risk on
Yeah,
that?
I think so. The gold has been really my shtick.
Oh yeah,
It,
nice run, huh?
Oh,
it,
I've been
And
loving
caught
gold.
yeah.
I've been having a good
And you
time
trade
with
it both
gold.
ways, right?
Yeah.
yeah, you can trade it both ways. This is the 5 minute. Let's get to the daily. Um,
Yeah, a lot of action every day, so that's a real
I mean,
fertile
you see,
ground to be trading, right?
I
Yeah,
mean, a small line, just a small, even on the daily chart is, the full contract, you're talking $2,000. It's just each 5 minute line. So you really have to be careful. I've been literally helping the prop traders with the smaller 50 and $100,000 accounts using 2 and 3 micro golds where you're only controlling 10 ounces or 20 ounces or 30 ounces and then taking what God gives you on the way.
Yeah.
But
is that much more liquid than the 32 ouncer that they used to have?
uh,
What is that? A
No,
big
no, no.
gold?
They used to have a mini. They used to call it a
Oh,
mini
oh, oh,
gold.
0.3. Yeah, three. Yes. Um,
But
yes. It's the micro is very liquid. I mean, there's so much action right now.
yeah.
Um, but this is the chart that I do look at when I'm looking at the general direction. I mean, you can see that we're coming into this is the gold is the 8-bar exponential moving average, which I like to use. I believe it's the golden mean, so to speak. Some will argue with me that it's the 9 EMA, but some the 10. But I like to
Yeah.
keep it a little closer with the 8. This
Relates to Fibonacci number.
this is the Fibonacci number right here, the 34, which I use as a backstop. I like to take my trades away from that. In other words, I like to take short trades when the 8 is below the 34, and I like to take longs when the 8 like this is above. So I'm looking for a long trade in here because the 8 I think it's the most likely. I mean, from the definition of moving average, it just makes sense. But when we get these squeezes, this is what I look for. This is why I keep on pressuring Sonny to tell me about the squeezes, because I really believe that these, and really part of my question to Erik was about when things come together, it's the expansion that I want. And of course, the 34 I like because of the fact that Fibonacci is an expansion, a universal expansion law. And so, you know, I like to use that as a backdrop. But you see what's happening here. This is the 20. And although I use it just to see what all the new people are doing. Because generally, you know, the 20 and the 50 and the 200 is where a lot of, you know, large and small firms go to. Although I do believe that some of the new people can get caught up in believing, you know, that's the only place to be. But I do like to see what they're doing. But right now, you can see that even between all of the moving averages that I'm looking at, the 8, the 20, the 34, we're playing inside of it. This is, you know, bottom line and goal. We're looking for a new direction, and the most possible is still the long direction. Generally, when you see these kinds of moves and then a corrective action. You're looking for that next pop up, and the environment. Although I don't like to depend or look too long at the economic and the environment outside of technicals, you know, it's still so unsure, and even the RSI is at 50%, not helping me anyway. So you know, I'm waiting now. You really have to sit here and wait for a signal on where to go. There are a lot of traders that I know from the past that are looking and kind of touching into some of the long options here naked, knowing that, you know, these guys they go by the adage that if I just buy a call option, all I can lose is every dollar I put in, but no more. And they look at that and in some senses there's a bit of wisdom to that, not to the inexperienced trader, but for the person who you know, who's found that they're pretty good at timing. You know, they do have their flash points where they can take out, never goes to zero. But you know, this is the time where you need to start to pay attention in options to where the premiums are going, because when you get those anomalies where all of a sudden the market will kind of pop up a little in premium, but for no reason, you know that you're probably getting probes by some of the bigger firms and so on. So, you know, for whether it's options or futures trading, here I'm holding my I'm holding my powder, as Sonny says, and I'm keeping it dry because I do think this next move could be very, very dramatic. I mean, according to this chart. So,
Norm, on the longer term graph, would you agree that the pullback should have stopped around 3,900, which it did, and the RSI stopping at about 50, which it should? And if that's 3,900 gets taken out and that RSI starts breaking under 50, going down to 35, 3,600 is certainly not off the table at all.
yeah, I mean, you've kind of said it in text terms, but in number terms. But you know, to me, 2 closes under the 34 in the daily chart will signal, you know, a more likely end to this excitement.
And where is that at? Around 39.20?
Well, you're seeing it right there, somewhere around. I'm seeing it at 39.
The print's kind of small for the older people in the crowd.
39.65 is where the.
So even at 39.65, you'd have a yellow flag up at that point, huh?
Yeah, I would say, you know, below that, but you know, we've breached that, but not on a closing basis, and I think that's a lot of traders get slammed around. You know, and another thing about building, about my experience in building trading plans, you're really buying breakouts can be a dangerous thing unless you wait for the closing bar of whatever time frame you're trading. So many people, it's going, I don't want to lose it. Again, somebody mentioned FOMO. I think it was you, option professor. Just that word FOMO is controls people in the wrong way. Let it come to you. You know, we were talking about, I think, the last couple of weeks when we were doing this, about how I don't chase, I attract. And that's kind of the way I look at it. And it's a pretty good suggestion for option traders as well as day traders. Let it come to you. You know, let define the scenario and let the scenario play out. And you can have 2 or 3 scenarios. And this is what you should have. If it does this, this is where I go. If it does this, where I go. So let the market tell you what to do, because the gold market has been unbelievably exciting. Look at that red candle. I mean, it was a crazy day. Hundreds
Yeah.
of dollars in gold in one
Yeah.
day.
Yeah.
You know, three, four
Do
hundred.
the prop guys have to trade futures, or could they use limited risk options generally?
You know, I haven't seen 90% of the prop trading firms used to be all for the Forex people, but then they got out of it because nobody was winning. You know, Forex is a tough game for small accounts. But now it's pretty much all futures.
All futures.
My
Yeah.
book was just released called Their Money, Your Profit, cashing in on the prop trading revolution. So it's in a soft launch right now. It's just released a couple of weeks ago, and you can see it on Amazon, either under my name, Their Money or Profit. I think for smaller traders, and what's interesting is that smaller traders can see, can kind of see the value of prop trading, where you can get 90% and trade their money. There are small fees along the way, but small relative to the opportunity that they're giving you. But the traders who seem to have more of an appreciation are the larger traders, where they say, why should I be trading $300,000 of my own money? I'll put that into, a surefire paper or something much more conservative, and I'll trade their $300,000. So again, it's the larger accounts that seem to be taking more advantage of this, and the smaller accounts are feeding it. I mean, when they're paying you 90% of the profit that you earn, how do they do that? Well, they're doing it because 90% of the people that are trading are just paying them the small fees.
Right.
It's a game. I hate to call anything a game, but it's game theory is the way I look at it. Just in the way that in a blackjack table, that the dealer has to hit to 17, and that you have to place your bet first, and you take the first hit. All of these rules are the rules that you need to respond to as a game theorist in order to win. And you can neutralize the blackjack table, as my brother and I did for years before they wouldn't let us play. And in futures trading, which is a little bit more speculative than most other forms of trading, there are rules in prop trading that you need to offset their edges. One of the edges is that they count loss of open trade equity against you. So what do? You employ scalping in your technique, which I've never been a scalper, but that's a way to do it, to keep that padding away from that red blowout line that they have. So it's a few things to learn, but it is true that they will give you 90% of the profit.
Yeah, I think the two things that you really help people with is the first thing is you need to have a plan. So you have the experience on coming up with the plan. But there's something that I listen to that you say a lot, and that is don't use too much leverage. These mini contracts were created, they're plenty liquid, and the death of a trader many times comes from not being wrong, but being wrong with too much leverage. Wouldn't you say that?
Yeah.
Absolutely. I mean, I think that's the bane of all traders, when nothing is too good and nothing is too bad. So you really have to listen. Leverage, especially in these kinds of markets, the way gold is moving, crude is moving, even the ES and NQ contracts. They're giving you a lot of opportunity to use the longer term charts. I would rather see somebody trade in a day trading version off a 60-minute chart, take on one or two gold contracts and let that work for you, than looking at something shorter term and taking on more contracts. So there's a lot of ways to smooth out the risk a bit. You'll never eliminate it, but you don't want to eliminate it, because that would be losing the leverage that can be to your advantage. But again, it's a matter of market analysis and edges, I call it. The other part is that not every trading plan is going to fit everybody because of their mental and emotional frailties. And so you need to pay attention to analyzing yourself as an individual, where you're weak. In other words, if you have a problem with lack of patience, you don't want a trading plan that gives you a signal on a daily basis every 2 hours. You're just going to force yourself to do something else. So you want to make adjustments so that you play into your weaknesses to neutralize them, as opposed to trying to turn around a person who's got no patience into a person with ice in their veins. That's less likely to happen.
I'm in the ice in the veins category, and I still like gold right in here.
Yeah, well,
Well, no, I mean, it had its correction to 3,900, like Norm was saying, and it
Mhm.
should be done, and it should
Yep.
be in the upswing. So
Yep.
obviously, it's definitely a place to like it here. But like
Exactly.
anything, start breaking under 3,900, you might want to throw the fish back in. You know what I mean?
I play off this is the 5 minute chart, and you can see where, here's a nice loaded gun signal. Here's another one here where with those two moving averages, the 34 and the 8 squeeze like this, and you get it looks like a revolver pointing higher on one side of the 8 through the 8. This is a signal right here. You're getting another one here, a lengthy version of it, and I like it because the 8 is below the 34. So, you just have to be, here's another one here where the 8 is below the 34, so you're looking for a short trade. You have a nice, everybody with experience loves to see this, what looks like a shooting star, but it's not quite in the right place. But the fact that you've got this tail that left everybody behind, it's crossed the 8 nicely, you're going to get paid off. More than not when you have the right process. So you have to be bold. You have to be bold, and you have to be strong, and you have to trust. So all of those things are mental things.
Mm.
That's why we concentrate a lot on helping with the mental part of trading.
Yeah.
And you're good at that.
Eric, I was going to ask you a quick question. You do a lot of the different futures. I actually found a good transaction about a month ago when I knew that Trump and Xi were going to get together, and I looked at the price of soybeans in the 10 to 10.50 range, and I go, well, if they're going to meet, they're definitely going to start talking about the fact that they haven't bought one grain of soybeans from us. And so I thought it was a pretty reasonable thing to go long on. And
Mhm.
certainly it's taken off like a bat out of hell. But do you see do you see the grains, or do you follow the soybeans? Do you think it might have just been a one-time pop here, or do you think it could be a situation where it could have a lot of legs?
No, that's a good analysis, I guess, from, looking at geopolitical events, right? And
Yeah.
kind of jumping in ahead of things and kind of front running events. But yeah, we do trade everything, but we don't trade those markets in the same way that we do like with the indexes using our options technology and so forth. So
Okay. You're not doing
yeah,
option writing strategies on individual things like beans or
no,
live cattle or whatever.
no, that would be in our estimation,
That's kind of risky. Yeah.
aggressive. Yeah.
Yeah. Yeah. Well, yeah, because like I say, a cocoa or a coffee market, can go up like limit up for like a days on end.
Well, this is way back when, but I was kind of starting out in the business, and there was a broker in our office, and he had a client that was short, I think something like tw 20 contracts of lumber, and it was
Yeah.
limit up for, I think, over 10 days in a row.
Yeah.
So that kind of stuck with me.
It's not worth
Um,
it.
yeah,
Yeah. It's
yeah.
not
But
worth it. Yeah.
anyway, no, that's my thought on that.
Yeah. But yeah, it was kind of interesting because, like I say, it seemed to me pretty obvious that it would have a pop. I didn't, you don't know how far the pop will take you because even the farmers, when he came out and he originally said they're going to be buying a tremendous amount of grains, the beans dropped 20 cents on that comment.
Yeah,
Only when
tremendous and beautiful. Yeah.
only
Well,
only when Besant came out and he said no, they're going to be buying 12 billion bushels or whatever, and quantified what tremendous meant that it went right back up again. So
Yeah.
yeah.
even the farmers, they love listening to Trump, but they like a little specifics. You know what I mean?
Specificity.
Yeah, there you go.
Specificity. There you go.
I
Yeah.
I have a lisp, so I can't really I can't really say that word very well.
Well, he,
Eh,
I can tell you that the grains are great markets to trade. There's a lot of volume and depth and liquidity in those markets,
and they
and
trend pretty good, right?
yeah, and from that perspective, they are good markets for sure. And I have to make one quick comment mentioning the micro gold contracts. Well, keep in mind, I'm old enough to remember when, gold was trading at 250 or 260,
Hmm.
and it would move, 40 cents in a day, and that would be a
Yeah,
big range.
yeah.
But think about it when gold was at 400 bucks an ounce not too long ago. Um, that's the same equivalent contract size as, gold trading at 4,000 an ounce, if you're looking at micro gold compared to, the full size gold. So 10 ounces of micro gold now has the same, value as a full size contract, 100 ounces when it was at, 400 an ounce. So kind of a kind of interesting how that market has just exploded. And the
Yeah.
people who've been paying attention, they've been noticing all along the way. But for the average person out there, I don't think gold has really even made headlines like it did certainly in the 80s. It seemed to me that was like the headline front page of the news every day, gold making new highs. But the
I've been
dynamics are
trading gold since it was at 35.
there.
Yeah.
There
Yeah.
you go. Yeah.
It was
I,
a,
I remember the
I'm an
gold
old
coin
timer.
days too, the gold Krugerrands and all that. And then I remember there'd be guys next to me, saying, "Don't you think there's going to be a $3 pullback next week?" And then I said, "These guys are taking these coins and putting them in a safety deposit box. By the
Mhm.
time they go look at them again, it'll probably be $1,000 an ounce. Who cares if it's going to pull back $3 next week? You know what I mean?"
That's right. That's absolutely right.
Anyway, but yeah, I know central banks globally are still buying gold even at highs here and are well close to
yeah,
it now. But
yeah.
yeah, I think gold is something you still want to try to stay long with. And uh, like Norman commented too, I couldn't agree more about, what we kind of try to preach is position sizing and moving incrementally. So otherwise you're not gonna make the right call and you know, more than likely not gonna make the right call if you decide all of a sudden, oh yeah, I'm going to go in big on this trade and really kill it, and that might work once or twice
Oh yeah.
and then it
Yeah.
won't.
It won't
So,
work. And when
yeah,
it doesn't work, there's no help. Yeah.
that's right.
The
And
the amount of money out in the world is just tremendous. So gold could go wherever it wants to go because they fire college coaches now and they pay them 76 million dollars to get out the door. So
oh
Wow.
wow.
it just seems to me that the value of money has gone a little crazy. You know what I mean?
Yeah.
Yeah, and I read too that let's see here. In fact, I jotted it down this morning. Gold moved from 4% of global investment assets to
Hmm.
6% of
wow.
global investment assets in the
Hmm.
last 2 years. So that's the highest since 86, I believe, is what
And just
Goldman
imagine
Sachs
if it
was
ever, and
commenting
just
on.
imagine if it ever went to 10% with all the
Right.
ET, because all these ETFs, they're supposedly backing it with gold, and there's not unlimited quantities out there. Same thing with the silver. Silver is actually, I heard, a little bit of a short supply kind of deal.
Yeah, everything is getting, what is it,
Platinum,
Yeah,
hypothecation?
yeah,
Yeah.
yeah,
platinum moved from
yeah.
1,900 to 1,700s back to a little bit lower than that right now. But I got a picture on my wall of me shaking hands with the Hunt brothers. I
Oh,
Oh
should
that's
yeah.
cool.
send that. No, I don't, Eric. Come on, I don't have.
Oh, Bunker and Herbert, you
You
didn't hang
might.
around with Bunky?
Yeah,
Bunker looked like
first
John Candy.
sponsor of
That's what
the
he looked like, John Candy.
Yeah.
That was Bunker Hunt.
True.
Well,
You
actually,
got me on that one.
he looked like Warren Buffett if he gained the weight of John Candy. That's kind of like what Bunker Hunt
Yeah.
looked like. Yeah. All right. Anyway, guys, with regards to Sunny, was there anything else that you thought you wanted to cover real quick on your Sunny bands? Because you got the Sunny bands up there.
Oh, I do?
I think you do. Oh no, no, David might have had his.
No, it looks like David's up there right now.
go to
Yeah.
the
Oh, yeah.
David dance.
You should
But
be able to share now. Yeah.
so I have Amazon up there right now. Does anybody else see Amazon?
Yeah,
Yes.
I got Amazon up there now.
Well, I
What about the SMH? Obviously, that is the hottest game in town, the semiconductor. Is there anything saying that yeah, there's a couple of reds up there?
it just looks like everything's going up.
Yeah,
Everything's it's pausing, but it's still going up.
yeah. No evidence of a drop, but certainly if a
Not
drop
yet.
happened from this level, it wouldn't catch mosquitoes in your mouth, right?
Yeah.
Yeah, because it is extended. What about the like something like the nuclear or how about the quantum stocks? Let's throw a few of those up there, like D-Wave, QBTS, and see if they're just having a pullback and maybe they're going to go back up. Yeah.
Ah,
You
that's
looking at that as
interesting.
a pullback going back up
That's more
or
than a
game over?
pullback. It's going to
Okay.
continue on down to the lower inner band, I think.
Okay.
So we've got
And
some more moves down on this one.
how about Rigetti, RGTI? Because these were the real
RGB25.
stars this year.
Rigatoni, you said?
Yeah, it's I thought it was something with spaghetti sauce. Yeah, spaghetti.
Yeah, so it's got the same formation. It looks
Yeah.
like it could have some more downside movement.
What about in the nuclear SMR? These are the ones that were big winners, and then they backed off a little bit. Is it game over a
Hmm.
little bit, or buy the dip,
SMR,
or SMR,
SMR.
SMR, modular reactor, small.
Hmm. That one looks like it's got some more downside movement to go as well. It's going to come down to this lower inner band,
Mm-hmm.
which is at 36.47. So we've got some choppiness going on there still.
Okay, so your nuclear and your quantum definitely still might have some more. Now, what about China, BABA, BABA? Is that just had a pullback and going back up? And Baidu?
Ah, it looks like it's done the same pullback those other stocks we're looking at, but that right now it's about ready to bounce and go back up.
Okay, so the China doesn't look so bad. And BIDU? Because this is where the big winners were this year. And
Hmm.
sometimes, they give you a
True.
pause to refresh.
Same answer.
Yeah,
Bounce right in here and go back up again.
yeah. So these two look more like a possibility of buy the dip. The other one is keep your powder dry.
Well, it's hard to hold in this
What's
chart.
the symbol for keep your powder dry?
Well, those were the quantum and the nuclear stocks that you thought maybe have more downside.
Yeah, okay.
And
Yeah.
then these two guys, they might be a situation where they are hitting their support zone. Here's another one that everyone loves, Oracle. Just had a dip, and it went right down to a number that I thought was very important at 255 area.
Oh
Is this
yeah,
is this
that's
where you want to
very
take your
important.
shot? What do you think?
Very important. I will go long right here.
All right, this is where you
As
shoot
I
the
used,
ball, quit dribbling, shoot the ball.
yeah, as they used to say, both hands down.
All
Well,
right, so that's good. That's good. Yeah, so those were just the ones that came to my mind a little bit because some were big movers, and then this was obviously a big mover. What about Qualcomm down in they're in your neighborhood, aren't they, San Diego?
Oh yeah, they're
Yeah,
just
so
down the
they had a
street
huge move of which I was fortunate enough to catch the 205 there, but then it
right
went right
here.
back into the soup a little bit here.
Yeah, so it had a nice big gap up
Yeah.
like that, a wick, and then it just came right back down. I love Oracle. They are right down the street from me, and I really
Qualcomm.
love the
Yeah.
company.
Yeah.
Qualcomm, thank you.
did you
Yeah.
move there so you could be close to them, Sonny?
I did. That's the only
No.
reason I'm in San Diego.
She went to the spiritual center in Encinitas and then she could never leave. They they gave her mind control over at that place that they got over there. All
Yeah.
right. So anyway, we are near the top of the hour, and I'd like everyone to be able to explain why people should get a hold of them and what kind of expectations they should have as far as information you guys could provide. Start out with Eric. Eric, a little bit about how you're going to help people.
Yeah, sure. We do a focus on options trading on the indexes, on the E-minis in particular. So the E-mini, S&P 500, Russell 2000, and NASDAQ 100. And we have some technology we developed over the years with some algorithms and working, the wizardry and the magic behind the scenes that help us craft and create these strategies and then automatically manage the risk and the reward. So it makes it very convenient for clients, and you can basically place a trade and accept it by just touching accept or reject. And then the automation, if you set it up to automate for you, it can basically close out that position for you when it hits a profit or a target, whichever comes a profit or a loss target, whichever comes first. So it's kind of having like having a stop loss and a profit target on your spread. And we like trading spreads, non-directional sometimes to collect premium. That's a lot of what we do, depending on the environment. But we can also do debit spreads and buy premium as well. So you're allowed to do a free demo and trial of what we offer with our trade alert. Just go right to our homepage, altavest.com, and then click that link on the right-hand side of the page there, and you can follow along with what we're doing.
And there's a lot of people who have different levels of expertise on options, and many people probably need a little hand-holding with certain strategies like the dragon strategy. Do you have people who can talk to the people and kind of walk them through that step by step so they have a good grasp of how it works?
Yeah, absolutely. First of all, we do webinars.
Oh,
So
good.
you
Yeah.
can sit through a webinar and we'll give you an instruction. And then we also have recorded videos and tutorials within the Theta Trader platform. And then beyond that, we're real people. So we're here and we'll talk to you. And that's part of what you get with our service.
That's great. Norm, I know you're trying to help people who are going with the prop trading, but you do other stuff as well. There's that sweating head. I always love it.
Yeah,
Uh,
if you would just tag the disciplinetrader.com/room. We just, what I noticed with prop trading is that that traders have an issue with being used to losing, you know, and it's a habit. Losing is a habit. And
Yeah.
so about 4 months ago, I decided I would finally open a trading room to teach people what winning consistently looks like if you follow the rules. So somebody who actually bought one of my mental products 15 years ago, a professional floor trader and still a member of the CBOT, he called me just the time I was thinking of doing. He's running the trading room, a guy named Dan D. Maria, who was actually the mayor of Morton Grove, which is a suburb of Chicago, and he just retired from that. But he's only 50 some odd years old, and he asked, "Can I run a trading room for you?" Well, he has been doing fabulously. Last month, helping prop traders to win and showing them
sure.
what winning looks like. And the major thing that people comment is when he loses, he it doesn't stop him from being specific on the trades he wants. He just keeps going, knowing that over the course of, they love the way he comes back if he has a couple of losing trades. And I think that's really what can get you started as a winning trader with a winning expectation. And so I'm offering a week for $5 a week in the trading room that you can kind of see this in action. So if you go to this URL, thedisciplinetrader.com, it actually changes there, so we'll have to put it in the chat. But thedisciplinetrader.com/room, take $5 out of your credit card and see what winning is like. I think he did over $3,000 last month again in a $50,000 prop account, and that's really what you want to do. You want to be the turtle that just wins as consistently as you can. So that's my invitation to everybody.
Yeah, that's a new feature, and that's a heck of a feature, Norm. So, because
Oh,
I'm sure.
with the
Yeah,
book that just came out, and this is going to be my main
yeah.
motivation now. We've got an over the 4 months, we've got an 87% stick rate for people staying in the room, paying on a
Yep.
monthly basis after the trial. So we
Yep.
know we have something really good, and I just believe that in general, videos and other things are going to be less likely to be attractive to traders in the AI world. What they want is community, and we're starting a new school community forum where everybody will be getting together and being able to communicate. We're doing a lot of exciting things with the room, but it starts with learning how to be a winning trader and have a winning expectation. It starts there.
And in the room, they're focusing on like the E-mini, generally speaking,
Yes, he does. The NAS NQ and the
and the E-mini.
ES.
Okay,
Derek
great.
point. I also prefer the ES. I think it's controllable. It's less likely to.
It's more liquid too.
So
Yeah, because if you're getting in and out all the time, you got to have that bid offer as tight as possible.
I'm trying to have him to at least talk a little bit about gold, because that's been a big winner for me personally. So
Sure. All right, Sonny, explain how people can get a hold of you and what they're going to get out of doing that.
Well, I've got a lot of stuff. I just put it in the chat. I have a new Substack room called tcrgsunny.substack.com. TCRG stands for Traders Catalog and Resource Guide, which is the magazine I published for many years. And I have found that the thing that sells best is free stuff. So this is more free stuff. Traders Catalog, tcrgsunny.substack.com. I post every night what I think the Dow is going to do tomorrow. So it's free. It's available for anybody. I've got a number of subscribers already, and I'd love to have you join. So I've got
Yep.
that for free. And then I've got the best thing I've got is Sunny Bands, which is the bands that you saw in my charts with the dynamic moving average. That is, I give you a free 7-day trial on that. So just give me a call. Numbers right up here at the top, or send me an email to sunny@moneymentor.com.
Sure. And everybody's got a little bit of a different angle on investing here and trading. So it's good to get as much information on different things and see which one really is up your alley.
Right.
As far as Option Professor is concerned, tomorrow we have our live option webinar. And if you want to get that, you just have to go over to optionprofessor@gmail.com. Send me an email. I'll send you the link, optionprofessor@gmail.com. And I do specialize in low priced options, meaning ones that go for 100, 200, or 300 bucks that we think have a lot of upside potential. So you get to learn how to use options that way as well. So good talk here, you guys, today, and everybody's got something they can learn from each one of us, so that's great. And we'll be back together again, of course, and let's see how these markets finish the year. We're into the last gallop here, the last 6 or 7 weeks, and we'll have to see how things pan out, but I think it'll be very exciting. So we'll be back together again to talk, I'm sure. Right now, I'm going to hand it back to David and thank everybody for listening in today, and we'll be back with you again next Monday.
Thank you, sir.
All right. Bye-bye.
Thank you, Jim.
Yep.
All right. Thanks, everyone. And just a reminder, everyone from today's panel will be on the Friendsgiving event this week. So that'll be, again, tomorrow, Tuesday, Wednesday, and Thursday, all day on TimingResearch.com. If you just come to the website, there will be a link similar to this to enter the Friendsgiving room. Let's see. Sunny will be on Tuesday at 6 p.m. Eastern. Norman will be Wednesday at noon Eastern. And Jim will be Wednesday at 6 p.m. Eastern Time. And then Erik will be Thursday at 4 p.m. Eastern Time. So be sure to join us this week for the Friendsgiving 2026 Profit Playbook event. And sorry, what was that sign?
Excellent.
Yeah.
I think that's excellent.
Yeah, it'll be a great event. Yeah. 30, again, 2026 Profit Playbook, 30 traders reveal or unveil breakthrough strategies is the official title for the event. So yeah, it'll be a lot of good ideas for traders. And then, of course, if you can't attend live, it will be recorded, and those recordings will be available on TimingResearch.com as well. Also, if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you can find them there as well. So, and then also, of course, the archive for today's show will be here as soon as I can get it processed. So I just want to thank my panel again for today. Norman Hallett of thedisciplinedtrader.com. Well, the right site. Erik Gebhard of altavest.com. Sunny Harris of moneymentor.com. And Jim, the option professor of optionprofessor.com. All right. So that's it for today. Thanks, everyone.
Thank you, David.
Great to hear from you, Erik. You sounded good, and always a pleasure, Sonny.
Yeah, that was fun. Talk to you guys soon and gals.
Okay.
Bye-bye.